Yes, sir. Good evening to all of you. Sorry, due to certain technical issues, the session is starting 4 to 5 minutes late. So please once confirm in the chat box that my voice is audible and the PPT is visible. Today confirmation is required, sir, because there are certain technical issues. So please confirm once so that we can start the session. I am waiting for your replies. Please comment in the chat box so that we can start our discussion. Everything is fine right now. Okay, sir. So, sorry for delay. So, let's start our discussion on rules. So, sir, yesterday we had discussed about the section 15 of CGST Act, that is value. We had discussed that the transaction value will be your value of supply if the price is sole consideration and supplier and receiver is not related person. But if supplier and recipient is related person or price is not a sole consideration, in that case you need to take the reference of rule number 27, 28, 29, 30, 31. We had discussed about rule number 27, which was applicable in case of, which is applicable in case of there is a money plus monetary value. In case rule number 27 will apply. Rule number 27 says open market value. If open market value is not available, in that case money plus monetary term, if you are not able to decide from A and B, then C is there, and C says that you can decide the value by same, like, kind, like quantity and like quality. And if you are not able to decide from A, B and C, in that case you need to take reference of master rule, that is rule number 30 and 31. After that we had discussed on rule number 28, that is in case of distinct person and related person. And for distinct person and related person, we had discussed that open market value will be your value of supply. If open market value is not available, in that case like, kind, like quality, like quantity. इसी के साथ we had also discussed that if I am going to supply that particular product and my branch is going to further supply that, in that case, we may do one thing, that the further supply price multiplied by 90%, we can take my value of supply. That what rule number 28 says. Now, sir, rule number 29. Rule number 29 will applicable in case principal and agent value of supply of goods made or received through an agent. Sir, I am a principal and I am going to transfer any product to my agent. In that case there is chances of manipulation. Hence government has come with rule number 29, value of supply of goods or made received through an agent. In that case, what will be the value? First option, you can take the open market value. Okay, in that case, open market value is your value of supply. If there is no open market value is available, in that case you have one more option. That means, just take an example. If I am going to supply a product to my agent for further supply, in that case first option is that I may take the open market value of that product. Let's say the open market value of that product is 1 lakh rupees and I am transferring just for 80,000. In that case I need to take the value of supply as 1 lakh rupees. Second option, if I am transferring that product to my agent, in that case if agent is going to transfer that particular product for further supply in the market to an unrelated person for 1 lakh rupees, in that case I may take the value of supply as 90% of that 1 lakh rupees, that is 90,000 will be my value of supply. Is that okay? In case of principal to agent, first option open market value, second option further supply ka 90%. If I am not able to decide from these options, in that case I may take the reference of master rule, that is rule number 30 and 31. Is that okay, sir? The rule number 29 will applicable only in case of C&F agent, because in case of C&F agent we had already discussed the concept of C&F agent. In case of C&F agent, agent will hold my stock, agent will sold my stock, so the rule is applied. But in case of commission agent, agent is not going to hold or sold my goods, he is only taking the sales. Okay, so in that case rule number 29 is not applying. This is only apply in case of C&F agent. Sir, everything is clear now? Sir, Rule number 30, master key. That is, if you are not able to decide from 27, 29, 28, in that case, you need to follow rule number 30. And what is the rule number 30? I am not able to decide the open market value, like kind and like quantity की value भी I am not able to decide, and I am not able to decide the further supply value. In that case, I can decide my costing. So I need to take the value as 110% of my costing. That is, if I am going to supply a laptop to my agent, in that case, there is no open market value available. Like kind and like quantity value is also not available, and my agent is not going to further supply that product. In that case, the value of supply will be such costing, that is the costing of laptop for me is 30,000. In that case, 30,000 multiplied by 110%, that is 33,000 will be the value of supply. Okay sir, that is what is the rule number 30. Sir, everything is okay. Rule number 29, principal and agent. Rule number 30, master. If you are not able to decide from any of the following rule, in that case, costing ka 110% will be your value of supply. Okay. So this rule is applicable when you are not able to decide from rule number 27, 28, 29. At the time of business audit, at the time of litigation, at the time of departmental audit. If earlier you had decided the price, the value as 110% of cost, in that case, at the time of audit, you need to prove that thing, that at the time of deciding, at that time, I was not able to decide the open market value, the same kind quality. So take care of this factor. If you are going to take this as value, then in that case, you need to ready certain documents for your reference. Is that okay, sir? Now, rule number 31, residual method. If you are not able to decide the value from 27, 28, 29, 30, in that case, you need to follow the journal principles. Okay, as per journal principles, you need to decide the value of supply. Sir, what do you mean by these journal principles? So, journal principles are the principles which are based or different from case to case. Okay, this is depend on your case. This is depends on the case to case. This is different. Okay, so rule 31 normally talks about the journal principles. So that we had discussed all the rules 27, 28, 29, 30, 31. Now we are going to discuss on certain specific rules which will be applicable in certain specific situations. That is rule number 31A, which will be applicable in case of lottery, betting, gambling. In case of lottery, in case of lottery, we all know that the pricing of lottery will be decided by the state government, and the running will also be decided in the hand of state government. In that case, what is the value of supply? So in case of lottery, the value of supply will be 100 divided by 128 multiplied by face value, because face value is decided by the state government, and always this is the general practice, face value will be on a higher side. Hence, government has come with the concept that you may take the value in case of lottery, the face value as decided by the state government multiplied by 100 divided by 128, or the price as notified by the state government in the official gazette, whichever is higher. इन दोनों में से जो भी ज्यादा होगा, that will be your value of supply, and you need to pay tax on that amount. Is that okay, sir? In case of lottery, value will be 100 divided by 128 of face value, or price as notified by the official gazette by the organizing state, whichever is higher. Next, in case of actionable claim, that is the probability of certain thing which is happen or not happen. So in that case, the value of supply will be 100% of your face value. Okay, 100% of your face value. One case is pending. Just take an example. One case is pending in the High Court, and there is chances that I will win that case. In that case, this is an actionable claim. The particular thing will happen. In that case, I will won the case. So in that case, the value of supply will be your 100% of the face value of that particular property in that example. Is that okay, sir? In case of my battery, lottery, betting, gambling, and horse races. Okay. Now, one question is there: value of ticket or value of prize? So sir, value is ticket is your face value, and that the same will be your price. And if price, any other price is declared by state government, in that case, that price or 100 divided by 128 multiplied by face value, whichever is higher, will be your value of supply. Is that okay, Sivananji? Now, rule number 32, determination of value in respect of certain specific supplies. Sir, what do you mean by specific supply? Sabse pehla, we are going to take the first example. Just take an example. If I want to go abroad, in that case, I have Indian currency and I want to convert that currency into foreign currency. In that case, I need to contact to any bank, that is forex department of that bank. So, bank is providing me the services for converting the Indian currency into foreign currency. In that case, what will be the value of supply for that bank, and bank needs to pay on what amount the tax. This is also an important part from bank audit point of view. In April, we all are going to bank audits for bank audits. In that case, if the audit of forex department is allotted to us, in that case, this is our responsibility to check the value on which forex department or the principal department of the bank has paid tax to the government. So how to calculate? Because in forex department, they are dealing in their day-to-day life only with those transactions, that someone has come with Indian currency, wants to convert in foreign currency, someone has come with foreign currency, wants to convert it in Indian currency, and bank will charge certain amount. So on that amount, bank needs to pay the taxes. So how the value can be calculated? This is a very important aspect from bank, from GST audit point of view, and from our basic knowledge enhancement point of view. Or if we have any client as a bank for GST purposes, in that case, this is also an important point. Okay, sir. So in case if I am going to bank for converting my Indian currency to the foreign currency, in that case, first option, if RBI Reserve Bank rate is available. Okay, just I am going to explain this provision through an example. Okay, sir. So if I want to convert that Indian currency into the foreign currency, that is, I want to convert in US dollar. In that case, the rate as on the date of conversion of US dollar is 75 and the RBI reference rate is 72, and I have Indian currency of rupees 75,000 rupees, and I want to convert that 75,000 rupees into the US dollar. In that case, what is the value of supply? So for calculation purposes, I need to deduct the RBI reference rate from the US dollar rate, that is 75 minus 72, and I need to multiply that figure with the units which I am going to convert. That is, I have Indian currency of 75,000 rupees and rate of US dollar is 75. So from that conversion, I will get 1000 US dollar. In that case, 75 multiplied by minus 72 multiplied by number of units, that is 1000, and the term come 1000, 3000 rupees will be my value of supply. Bank needs to pay tax on these 3000 rupees. Is that okay? Sir, it is a very important part. Okay. And multiple time banks has made multiple mistakes. So this is our responsibility not to completely believe on the banking software, whatever will be the banking software of that particular bank, Finacle or any other software. We need to check it manually also through a formula setting in Excel. Okay, so this is the first point. From there, I can decide, we can decide the value of supply. Another, just next situation where RBI reference rate is not available in the market. In that case, the value of supply will be, I have Indian currency and I want to convert that Indian currency, then the value of supply will be 1% of my Indian currency. That means if I am going to convert 75,000 as a US dollar, in that case, 1% of that 75,000 will be your value of supply, and bank has to pay the tax on that amount, that is 750 rupees. Is that okay? Next, if I am a foreigner and I am in India and I want to again go to another country, I have US dollar and I want to convert that US dollar into euro. For that purpose, I am going to the SBI Bank Forex department. In that case, what will be the value of supply? So in that case, bank needs to convert that euro into Indian currency and that US dollar into Indian currency. Or in दोनों में से whichever is lower, on that amount bank has to charge 1% as value of supply. Is that okay? Or on that 1% bank needs to pay the GST. Sir, everything is okay. In first situation, RBI reference rate is available. So US dollar minus RBI reference rate multiplied by number of units. Second situation, RBI reference rate is not available. In that case, जो base currency जिसको मैं convert करने जा रहा हूँ, that is Indian currency, I need to take 1% of that currency. Third, where Indian currency is not in role, in that case foreign, both the foreign currency has to be converted into Indian currency, and whichever is lower will be multiplied by 1%, and that amount shall be treated as your value of supply. Sir, is that okay? Important term hai, and confusing hai, but I had tried my best to make it as simple as possible. Next, sir, in that case, bank has two options. First option we had already discussed. Now the second option. Second option called as composition option. Okay. Or if you had selected the composition scheme, in that case, you will not be in a situation to change the scheme during the financial year. Okay, sir. Please comment in the chat box. The first point is clear in your mind. That is, first point is clear in your mind. The second point. Sir, second point is my composition scheme. And in case of composition scheme, what is the value of supply? So in that case, if the amount is up to 1 lakh rupees, that is, I want to convert 1 lakh rupees up to 1 lakh rupees to a foreign currency. In that case, the value of supply will be 1% of gross amount of currency exchanged from amount up to 1 lakh rupees, subject to a minimum of 250 rupees. Okay. Next, if the amount exceeds 1 lakh rupees but up to 10 lakh rupees, in that case, 1000 rupees and half of the percent of gross amount of currency exchanged. We will discuss on that with an example also. And third one is, if the amount exceeds 10 lakh rupees, in that case 5500 rupee plus 1/10 of a percent of a gross amount of currency exchanged for an amount exceeding 10 lakh rupees, subject to maximum up to 60,000 rupees. Now, sir, we are going to take one example, and from that example we are going to discuss on that point. Gross amount of currency exchange. I have 80,000 rupees in Indian currency and I want to convert that amount to foreign currency. In that case, the amount is up to the amount is up to 1 lakh rupees. In that case, 1% of that amount, that is 800 rupees, or minimum 250, whichever is higher, that means 800 rupees will be the value of supply, and bank has to pay tax on that 800 rupees. Okay. Next situation, I have 5,60,000 rupees, that is above 1 lakh but up to 10 lakh rupees. In that case, what will be the value of supply? So in that case, 1000 rupees or 0. Plus 0.50% of the gross amount exchanged, that is 3800 rupees, will be the value of supply for bank, and bank has to pay tax on that. If the amount exceeds 10 lakh rupees, that is, if the amount is 16 lakh rupees, in that case 5500 plus 0.10% of 16 lakh, that is gross amount exchanged, that is 7,100, subject to maximum of 60,000 rupees. Is that okay? Here there is two options available in case of bank forex department. One is regular option, we had already discussed, and second is composition theme, in which you need to pay the certain amount as a value of supply. Sir, everything is okay regarding foreign currency exchange? Please comment in the chat box so that I can take the next topic. In case of booking of tickets, okay, if I want to book a ticket with air travel agency, okay, air travel company, in that case, what will be the value of supply on which GST has to be paid? So, for travel by air provided by an air travel agent shall be deemed to be an amount calculated at the rate of 5% of the basic fare. That means if I want to book a air ticket and I have connected with a air travel agent, in that case, value of supply for that air travel agent is, if this is a domestic booking, in that case 5% of basic fare, and if this is an international booking, in that case 10% of basic fare will be the value of supply in hand of the air travel agent. Sir, what is the concept between 5% and 10%? So, air travel agent will take certain amount from you. That means 10, just take an example, 10,000 rupees as a fare. Okay. Or he is going to provide back that amount to the air company, whatever will be the company, Air India or Vistara, and he will get certain commission. So, based on the calculation, based on the parameter, lawmakers has decided that 5% of the domestic fare will be the value of supply in hand of that agent. Sir, is that okay? 5% of 10%. Nothing important. This is a specific provision. So, we had discussed. Now, sir, in case of life insurance business, sir, in case of life insurance business, in the hand of life insurance company, what will be the value of supply? If I am going to a LIC company and I want to make a insurance. Okay, in that case, the terms decided that I need to pay 6,000 rupees per quarter to that LIC company, and LIC company will invest 5,000 rupees every quarter and 1,000 is charges. In that case, 6,000 I have invested, 5,000 on my behalf. In LIC has invested in other company. In that case, on that 1,000 rupees will be treated as value of supply, and LIC will charge GST on that 1,000 rupees. Is that okay? Now, if I have deposited 2 lakh rupees, cumulatively 2 lakh rupees to LIC in one time, and मैंने उसको बोला कि you should invest that figure. In that case, the value of supply for that LIC company is 10% of the single premium charged. If the single premium policy, in that case 10%. If there are multiple premiums are available, in that case premium amount minus those amount which is invested by that LIC, जो balance figure बचा, the balance will be charged as a value of supply and GST will be charged on that figure. Is that okay? Just take an example, 6,000 rupees mera premium, 5,000 rupees is my investment by LIC, then GST should be charged on that 1,000. If there is a single insurance policy, that is single premium policy, that is 2 lakh rupees, in that case 2 lakh multiplied by 10% will be the value of supply. Is that okay, sir? Now, third, in all other cases, 25% of premium charged from the policy holder in first year. Now, if I am going to apply for a term insurance or accidental policy, in that case, whatever will be the premium, 25% for first year will be treated as your value of supply, and insurance company needs to charge GST on that figure. And for the next year, 12.5% will be your value of supply, and उसके ऊपर GST लग जाएगा, because in case of term insurance, there is no investment done by that insurance company. So there is a specific percentage, 25% or 12.5%. Is that okay, sir? Three situations under LIC we had discussed. In first situation, premium minus investment, balance figure will be your value of supply. In case of single premium policy, 10% of that premium. In case term insurance, accidental insurance, when insurance company is not going to invest any amount, in that case first premium 25%, and for next premium 12.5% will be your value of supply. Is that okay, sir? One question is there. If booking provided by air company, then what would be the supply, value of supply? In case of air company will provide you the complete. If you are directly booking through an air company, in that case, air company will charge GST on the whole amount. The specific provision in related to the agent only, because in case of agent, I am not decide the value. Hence, government has provided this rule. Okay. In case of company, air company like Air India, Vistara, and whatever will be the company, Indigo. In that case, the price charged by the airline company, because In that case, directly section 15 subsection 1 will trigger, because me as a traveler and the air company is not a related person, and price is the sole consideration. I am not going to pay any other thing to that company except the price. So hence section 15 subsection 1 will trigger, and the transaction value will be treated as your value of supply. Is that okay, Sivananji? Then I will get good amount of GST. From which reference you are talking? I am not getting your point. If air company will charge GST, then you will get the good amount of GST. You are saying this. Yes, but the traveler is for the business purpose only. Okay, you need to prove that I am going for business purpose, and you need to take that input in your business only. Now, second-hand goods. If I am in a business of dealing with the second-hand goods, that is, I am buying certain second-hand goods and I am selling those goods to the common public. In that case, if on that second-hand goods there was no GST, okay, because I have purchased that goods as a scrap value from someone else. In that case, if I am going to sell that product in the market, in that case, the value of supply will be my selling price minus my buying price. The difference will be my value of supply. Just take an example. I had bought one laptop from an person as a second hand goods for 20,000 rupees, and if I am going to sell that product at 22,000 rupees, in that case 2,000 rupees will be my value of supply, and I need to pay the tax on 2,000 rupees. If I bought that laptop, another situation, if I bought that product at 20,000 rupees, and if I am going to sell that product as 18,000 only, in that case there is a negative value, that is 2,000 rupees. So there is a no requirement to pay the GST in case of second hand goods, but the condition is applicable only in case where I bought that product without GST. But question arises, if I bought that product with GST, that means input tax is charged by my supplier on that particular product, and I have taken that input tax credit. In that case, at what price I am going to sell that particular product, I need to charge GST on that whole amount. That means I had purchased that product at 20,000 and GST at the rate of 5%. In that case, GST amount is 1,000, and I have taken the input tax credit. At that time, if I am going to sell that product at 20,000 or 22,000 rupees, in that case I need to charge GST on that 22,000 rupees. And if I am going to sell that product at 80,000, 18,000 rupees, that I had bought at 20 plus GST, and I am going to sell that product at 18,000 rupees, in that case I need to charge GST on 18,000 rupees. There is no benefit available of the negative figure. The benefit is only available in case GST was not imposed at the time of buying, where no input tax credit has been availed on the purchase of such goods. Is that okay, sir? Important part in case of selling of second hand goods. Example is there. I had already discussed that example. Now, next situation. Next. Value of service in case of pure agent. Sir, what do you mean by pure agent? What do you mean by pure agent? Term pure agent. Just take an example. As I am a chartered accountant, my client has come with me and said that the tax payment on ROC portal is 10,000 rupees. So just you pay that amount from your bank account. We will reimburse you at the end of year or at the end of month. Okay. And I had make that payment. I had make that payment to the ROC portal on behalf of my client. In that case, when I am going to pay that amount to ROC portal, in that case, I am doing the work in the capacity of pure agent of my client, because that liability was not mine. I have paid that amount to ROC portal, MCA portal on behalf of my client. At the time of preparing the invoice, when I'm going to prepare invoice for my consultancy services to my client, just take an example. Monthly, I had raised one invoice of 20,000 rupees. In that case, I need to charge GST on that 20,000 rupees at the rate of 18%, and after charging GST, I will add the amount of MCA fees, just 10,000 rupees, and I am not charging tax on that amount, because I had made that payment on behalf of my client. Okay, so in case as I am working as a pure agent, in that case there is no GST charge on pure agent services. The same has been mentioned here in the provision. And there are certain examples also. Services fees collected by the airlines and paid to the government shall not be included in value. Whenever you will check the invoice of the airline company, you will found one service fees, and that amount will directly paid to the government by the airline company. In that case, airline company will not charge GST on that figure, because airline company is collecting that amount from the client on behalf of government, that is as a pure agent. Okay, sir. Can I get ITC of 18%, Sivananji? In case of second-hand goods, you are eligible to take the ITC as 18%. Or if you are talking about travel agency, in that case, also you are eligible to take the input tax credit, whatever will be the GST charged on your invoice. But the condition is that you should take that service in the capacity of your business, in the course or furtherance of your business. Now, section 15, subsection 5. Notwithstanding anything contained in subsection 1 or subsection 4, the value of supply as may be notified by the government on the recommendation of council shall be determined in such manner as may be prescribed. That means no scrap product. Yes, you are eligible to take the input tax credit. You had taken input tax credit, hence you need to pay the value to the government as a 100% value. That is, if you are going to take the input of 18%, in that case you need to pay tax on that amount of your selling price, that is whatever will be 22,000 or 18,000. Okay, sir. और यहाँ पर सेक्शन 15 सबसेक्शन 5 says notwithstanding anything contained in subsection 1 or 4, government has the power to decide the value of supply in a specific case. Okay, so this is the most important provision where government has the power. Okay, sir. So we had discussed on section 15 subsection 1, 2, 3, 4 and valuation rule 27, 28, 29, 30, 31, 31A, 32, in which we had discussed certain special situations: foreign currency exchange, second-hand goods, booking, or life insurance policy, and the concept of pure agent services. Okay, sir. This is the very important part, very crucial part of law. We need to take care of it. Now, sir, section 11 of CGST Act. We had discussed on section 7, 8, 9. Then after we had directly discussed on section 12 or 13 or 14, that is time of supply. After that we had discussed on section 15, that is value. Okay, now we are going to discuss on section 11, that is power to grant the exemption. This is not so important section. I just clarified this part. Okay, that means here section 11 give power to the government of India, that government of India can decide, then government of India can notify any product or services as a exempted supply, as a exempted supply. This is the power in hand of government of India with the recommendation of council. If council will recommend it to the government of India, in that case government of India can notify any particular goods or particular services as a exempted supply. The whole concept is mentioned in section 11. Okay, sir. So I am not going to in detail, because this is a general provision, common provision, not an important in section 11. Now we are going to start the most important section of GST Act. Sir, why I am saying that this section is so important, this section is most important? The logic. Sir, input section 16 talks about input eligibility and conditions to claim input tax credit. This is the most important section. Sir, why this is the most important section? If I am talking about from litigation point of view, from departmental scrutiny, departmental audit point of view, in that case, the maximum chances of litigation is the input tax credit, because input tax credit is the heart of goods and services tax act. Why, sir? Why input tax credit is hard? Because the maximum number of filters are available in section 16, that is in input tax credit, while you are going to claim the input tax credit. In that case, you need to take in your mind various things, various filters. Just for example, I am taking the example. When you are going to take the input tax credit, you need to first check that the input is eligible as per section 16 subsection 1 or not. That is, the input is related to your business or not, in the course or furtherance of business or not. Then after, you need to check section 16 subsection 2, that is conditions to claim input tax credit. There are 5 important conditions to claim input tax credit. After taking care of those sections, those conditions, after that you need to check that if that particular input is blocked under section 17 subsection 5 or not. After that, you need to check that any reversal is there as per rule 42, 43 of CGST rules, yes or not. Or after that, you need to check that the particular input is showing in your GSTR 2B or not. Or if the particular input is showing in your GSTR 2B, in that case, you need to check that the input is eligible or not eligible as per section 38 of CGST Act. So, sir, there are multiple restrictions, multiple conditions, multiple filters are available in case of input tax credit. Hence, I am saying that the maximum number of litigations in current or in future scenario will be only due to your input tax credit. Without wasting the time, we are going to discuss on section 16, subsection 1. Sir, concept समझ आ रहे हैं ना sir? Your concepts are clear in GST. All the things which we had discussed in last 4 days is clear in your mind or not? एक बार comment करके बता देना. Once comment in the chat box. So this is also a motivation for me. Section 16 subsection 1. Section 16 subsection 1 talks about if you are buying anything, if you are buying anything, if you are using those product or services in the course or furtherance of business, in that case you are eligible to take input tax credit. Sir, this is a common provision and this line is exactly correct, not an issue. If I bought certain things and I am going to use those product or services in the course or furtherance of business, in that case I am eligible to take input tax credit. The same input has been credited in my electronic credit ledger. Okay, section 16 subsection 1. Now, section 16 subsection 2 says about, sir, if you are using those product or services in the course of your business or furtherance of your business, so you are eligible to take the input tax credit. But first you need to check section 16 subsection 2, that is important eligibility conditions for claiming input tax credit. So sir, what are the conditions for claiming input tax credit? First condition, I have tax invoice or debit note. If there is no tax invoice or debit note in my hand, in that case, I will not be eligible to take the input tax credit. So the first requirement is that you are going to use those product or services in the course of furtherance of business. But if you have no invoice or debit note, in that case, you are not eligible to take the input tax credit. So the first condition is that. So the first condition is that. So the first condition is that you have tax invoice or debit note for claiming the input tax credit. Next condition, the same has been shown in your GSTR to be return. That means the input which you are going to take in your GSTR 3B return, the same has been reflected in your GSTR 2B return. If the same has not been reflected in your GSTR 2B return, in that case you are not eligible to take the credit although you have invoice. Okay, so the first condition, टैक्स इनवॉइस और डेबिट नोट. सेकंड कंडीशन, जीएसटीआर 2B में इनपुट रिफ्लेक्ट होनी चाहिए. थर्ड कंडीशन, सर एक एग्जांपल ले लूं क्या? कैन आई टेक वन एग्जांपल रिगार्डिंग जीएसटीआर 2B रिटर्न? वेरी इंपॉर्टेंट एग्जांपल, वेरी इंपॉर्टेंट इन अवर प्रैक्टिकल एंड डे टू डे लाइफ. Just a practical situation. I had taken one input tax credit in the month of June 2022. Okay. जून 2022 में मैंने कोई इनपुट टैक्स क्रेडिट क्लेम कर ली एंड दैट इनपुट वाज नॉट रिफ्लेक्टेड इन माय जीएसटीआर टू बी रिटर्न because my supplier has filed the return on 12th of next month. In that case, the same has not been reflected in my GSTR to be return. But I thought that in next month, I will pay the interest on that amount. at the rate of 18% because I had claimed the wrong input. So I will pay the interest. Okay. Next month, the same input as reflected in my GSTR to be return, and I had paid interest on that. Done. Everything done. After 1.5 years, my case is considered in scrutiny and department has given me notice for that purpose. While checking all those things, department says that in June 2022, you had taken an excess input tax credit of 1 crore rupees. Because that amount was 1 crore rupees. I am just taking that example from higher side. Okay. You had taken an excess input of 1 crore rupees. I said, yes, I had taken that input. But in next month, the same has been reflected in my GSTR to be returned. And I had already paid 18% interest. So there is no issue. Department says you had taken input in June 2021 that was not reflected in GSTR to be returned. That means at that time you was not eligible to take that input tax credit. So you had taken the wrong input tax credit. So the correct treatment is that next month you need to reverse that amount in your GSTR 3B return with 18% interest, and after that you need to reclaim that input tax credit. So now, sir, what I can do? Department says you had wrongly taken that input tax credit and you had not made any reversal. So first, as of now, you need to reverse your input tax credit of 1 crore rupees. Okay, sir, do it. 1 crore rupees. I am ready to reverse. Now, sir, I can claim that input tax credit because the next month the same as reflected. No, dear, you are not eligible to claim that 1 crore rupees because the time has already left as per section 16, subsection 4. So please check the implication of that little mistake. I am not eligible to take that 1 CR input, or I have to reverse that 1 crore rupees. There is dual implication available. So we need to take care of each and every provision of law. I just taken one example. There are hundred thousands of example available in the market in which due to very small mistakes or very big results are there. So this is a very small issue. We need to take care of this. Okay. So come to the topic that Section 16, subsection 2, eligibility conditions for taking input tax credit. So invoice is required. The same has been shown in GSTR to be written. Also, the third condition is that you have received the goods or services. If there is no goods or services is in your hand, in that case, you are not eligible to take the input tax credit. For that purpose, if I bought certain goods from Gujarat on 31st March, okay, or on the basis of invoice, I have taken the input tax credit. At the time of business audit, at the time of departmental audit, department will check that your invoice date is 31st March. Okay, and you are getting that goods from Gujarat. This is practically possible that within 1 day you have received the goods. So this is a suspected situation. In that case, department says that you are not eligible to take input tax credit and you have claimed that input tax credit. So first reverse that input tax credit, and now due to timeline prescribed under section 16 subsection 4 has already left, so you are not eligible to claim that input tax credit also. So this is also a small issue, but the effect of this provision is really very huge. So for claiming input tax credit, first need you have tax invoice or debit note. Second, the same has been reflected in your GSTR to be returned. Third, you had received the goods or services. Fourth, your supplier has paid the tax, so you need to check that also. For financial year 17, 18, 18, 19, 19, 20, there was no any specific tool available on the GSTN portal to check that my supplier has filed the return or not. So for that purpose, there are multiple decisions available. Okay, on which we have, one can argue that for 17, 18, 18, 19, 19, 20, the provision is not followed. Okay, so this is an argument which we can do. Fourth and fifth condition, that you had filed your GSTR 3B return. So five mandatory conditions are there for claiming input tax credit. First one, tax invoice debit note. Second one, reflected in GSTR 2B. Third one, you have received the goods or services. Fourth one, your supplier has paid the tax. And fifth one, you had furnished the return under section 39, that is your GSTR 3B return. Sir, if you are getting the goods in lots, in that case, on the at the time when you will receive the last lot, you will be eligible to take input tax credit. Okay, sir. This provision is a specific provision which will be applicable in case of lots. Now, sir, if I bought certain goods from my supplier and if I am not going to pay that amount to my supplier within 180 days from the date of invoice, in that case, I need to reverse the input tax credit. What is the logic behind this provision? Government wants flow of money in the market. So that government has come with that provision. Also, government wants to reduce the fake invoicing, and for that purpose, also government has come up with this provision. So if I had not made the payment to my supplier within 180 days, I need to reverse my input tax credit with 18% interest. Sir, what is the process to reverse that input tax credit? So for reversal, I need to reverse my input in my GSTR 3B return and shown the same in the GSTR 3B return under other reversal tab. That is what is the concept, which is that is what is the mechanism which is prescribed under budget 2023. Okay, before that there was a provision that I need to add that amount in my output tax liability. But now from 1st April 2023 in budget 2023, government has proposes that the mechanism to reverse that input tax credit is to show that amount in other reversal tab in GSTR 3B return if you had not made the payment to your supplier within 180 days from the date of invoice. Okay, sir. Now, section 16 subsection 3 is related to your depreciation. Just take an example. I had bought one laptop for 10,000 rupees. Okay. And the GST on that amount is 18%, that is 1800 rupees. My invoice value is 11,800 rupees. In that case, I am eligible to take depreciation on taxable value only, that is 10,000 only. I am not eligible to take the depreciation on my input part. This is a general provision. I assume that we all know this provision. Okay. Or logically भी देखा जाए तो logic behind this provision is that if I am going to take the benefit of income tax, that is depreciation, I am taking the benefit of depreciation under Income Tax Act, then I am not eligible to take the GST benefit on that benefit on which I have already taken the benefit under Income Tax Act. Okay, sir. Now, the same example is here, only figures changed. Okay, sir. Now, section 16, subsection 4 talks about the timeline in which I can claim the input tax credit. What is the timeline in which one can claim the input tax credit? So, just take an example. For financial year 2022-23, if I am going to take the input tax credit, then the maximum timeline for financial year 2022-23, that is 2022-2023, in that case the maximum timeline is 30th November of next financial year, that is 30th November of 2023, or the date of my filing of annual return, whichever is earlier will be the timeline in which I can claim the input tax credit regarding financial year 2022-23. Okay, sir. If I had filed my annual return on 15th of October 2023 or the last date is 30th November 2023, in that case the 15th October 2023 will be the last date till I can claim the input tax credit related to financial year 2022-2023. Is that okay, sir? Timeline under section 16 subsection 4. Now, rule number 36, documentary requirement and conditions for claiming input tax credit. We had already discussed that for claiming input tax credit, I need certain documents. That is, if I am going to take the input tax credit on behalf of invoice, in that case, the requirement is that in my hand, there is a requirement that I have the invoice. Also, if I am going to take the input tax credit on behalf of debit note, then debit note is required. If I am going to take the input tax credit on behalf of bill of entry. In that case, bill of entry is required in case of import or in case of input service distributor. Sir, question arises, what do you mean by input service distributor? We will discuss on this concept in detail in our next session. Okay. Now, just for concept clearance, I am taking the example for of input service distributor. I am a head office registered under Rajasthan and I am buying certain products. I am doing the centralized buying and I am transferring those products to my various branches situated in Gujarat, Maharashtra, West Bengal. In that case, I need to transfer the input tax credit related to those products which I am going to transfer. In that case, for transferring the input tax credit, I need to take the registration under input service distributor. Hence, when I am going to take the registration as an input service distributor, in that case, I should issue the invoice as an input service distributor. And if my branch is going to claim input tax credit on that regard, in that case, the input service distributor invoice or input service distributor debit note or credit note should be in hand of my branches for claiming the input tax credit. So the documentary requirement is my invoice, my debit note, yeah, bill of entry, or the input service distributor debit note, credit note, or invoice. Okay, sir. Now there is certain mandatory requirement on the invoice that those fields should be there on the invoice. Now, if there is no field available, that means there is requirement that HSN code should be on the invoice, the taxable value should be on invoice, GST and the invoice value, the CGST, SGST, the description part will be on invoice. Okay. So, if there is any part is missing, in that case, at the time of departmental audit, at the time of business audit, department will argue that there is no mandatory field is available in the invoice, hence you are not eligible to take the input tax credit. So how we can argue at that time? So just take an example. When we are going to buy something, then we are first reading all the star marks things, because all the terms and conditions are hidden on those stars. Am I right? The same principle apply in case of any law, whether it is a GST law or income tax law. If there is any proviso, then the proviso is the most important part of law, because all the hidden things are there in proviso. So here, proviso, that is provided that if the said document does not contain all the specified particulars but contains the details of amount of tax charged, description of goods and services, total value of supply of goods and services, GST of supplier, recipient and place of supply in case of further state supply, input tax credit may be availed by such registered person. That means प्रोवाइजो ने यहाँ अपने को बचा लिया. Proviso says that if all the particulars are not mentioned, but the specific particulars are mentioned, in that case you are eligible to take the input tax credit. Sir, from that proviso we can argue with departmental authority if the HSN code is not available on that invoice. In that case, we may reproduce the language of that proviso in behalf of in front of the departmental authority, that sir section 36 subsection that is rule 36 sub rule 2 ka proviso says that these are the mandatory field and these are available in the invoice. HSN code is not treated as mandatory field under this rule, so we are eligible to take the input tax credit. So this is also a ground for argument. Okay, sir. Now if you are going to pay any amount on account of any demand by the departmental authority, in that case you are not eligible to take the input tax credit on that demand. Okay. Now reversal of input tax credit in that case of payment of consideration, we had already discussed this concept at the time of discussion of section 16 subsection 2. Now question arises, sir, what is the difference between section and rule? I am always saying that rules section says what to do and rules tells to us that how to do. Rules tells the procedure for doing anything. Okay, so rule 37 is related to input tax credit reversal. That means if I am not going to pay to my supplier within 180 days, in that case I need to reverse the amount of input tax credit with 18% interest, and the mechanism of reversal is that I need to show that figure in the other reversal tab in GSTR 3B return. So that is what is the mention in the return. Okay. Now, if supplier has received advances from the supplier, here one correction is there. Please correct this. This is not supplier, this is recipient. Okay. Please correct the same in the book also. If the supplier has received advances from the recipient, then supplier has to pay taxes on the advances, but the recipient is not eligible to take the input tax credit. That means if I am going to supply any services to my client, or for that supply my client is given me an advance of rupees 50,000 rupees, In that case, I need to pay the tax on that 50,000 rupees because this is a supply of service advance on account of supply of service. But in that case, my recipient is not eligible to take the input tax credit. Okay, sir. Now, if there is any loss, if there is any normal loss, in that case, input is allowed. That means I bought an particular product for rupees 1 lakh, and I had used that product in my manufacturing process. Okay, I had bought it 1,000 1 lakh rupees, and I am going to use that product in my manufacturing process. And after process 20,000 rupees is my normal loss. इसको दूसरे एग्जांपल से समझते हैं. I am going to take the next example, that is I had bought certain product, the quantity is 10,000 units, and I am going to use those products, those units in my manufacturing process. And after process, I got only 80,000 units. In that case, I am eligible to take input tax credit on complete 1 lakh units because input is allowed on normal loss. But if there is any abnormal loss, that is I have put 1 lakh units to my manufacturing process and I got 70,000 only. 20,000 in my normal loss. Okay, because this is the tendency of business. This is the tendency of my manufacturing process that 20,000 units will lose, but 10,000 will lose due to certain the loss of 10,000 units will be treated as your abnormal loss. In that case, you are eligible to take input tax credit on your normal loss. That is, you are eligible to take on the amount of 90,000 units, but the 10,000 rupees, 10,000 units, which is your abnormal loss, you are not eligible to take input tax credit. And if you are take the input tax credit on the whole amount, in that case, you need to reverse that particular amount in your GSTR 3B return in the other reversal tab. Is that okay? Any loss during process shall be allowed, that is ITC shall be claimed on the whole amount of input purchased. If any input short received, then in that case ITC is only allowed on the received input. But if input short received due to natural losses, in that case ITC allowed. Just take an example. If I had bought certain product और उस प्रोडक्ट का नेचर ऐसा है वो सिकुड़ेगा, सिंकेज होगा उसके अंदर, there is sinkage in that product. In that case, that sinkage is a natural loss. In that case, input is allowed on the whole amount. But if certain goods has lost during the transit, in that case that lost is due to abnormal loss. In that case, input is not allowed. Hence, conclusively we can say that input is allowed in case of normal loss, but if there is any abnormal situation, in that case input is not allowed. Again, I am saying that this is the principle, that it's depend on you how you are going to argue, how you are going to prove that particular loss is an abnormal loss or particular loss is a normal loss. This is completely based on you. Okay, sir. So in our today's session, we had discussed on section 15, that is value with rules. The rule number 29, rule number 30, 31, 32. We had already discussed the concept of pure agent. After that, we had discussed the section 16, subsection 1. That is, if you are going to buy certain things and you are using the same in the course of furtherance of business, in that case, you are eligible to take the input tax credit, but you need to follow the conditions mentioned in section 16, subsection 2. That is, you had received the goods, you have invoice the same as is shown in your GSTR 2B return. Also, your supplier had paid the taxes and you had filed the GSTR 3B return. After that, we had discussed the concept of payment to supplier within 180 days. Okay, section 16 subsection 2 ka proviso. After that, we had discussed on section 16 subsection 3, that is depreciation part. Okay, section 16 subsection 4 talks about the timeline within which you are going to claim the input tax credit. So sir, after that we had discussed on the various rule number 36, that is documentary requirement, and rule number 37, that is reversal. Okay sir, so it's sufficient for today. So if you have any query, you may raise the query in the chat box, or you may raise the queries in the WhatsApp group. I will solve the query as soon as possible, not an issue. So wishing you a very happy Holi, और मिलते हैं in our next session, and thank you for the patience learning. Thank you sir.